NIO has been among the most talked about EV makers in recent years. Now, following a poor share price performance, the car manufacturer's investment case has evolved from a high-flying growth story to a high-risk investment. Now, beyond the current market sentiment, NIO does seem poised for a remarkable comeback. And when you factor in the company's surge in vehicle deliveries, alongside its surprisingly modest valuation, the stock does seem to be well positioned for significant upside in 2025. And based on NIO's potential, I'm bullish on this stock in advance of a potential re-rating as we wait for the Q4 earnings report. Moreover, Wall Street analysts are offering conflicting opinions on NIO's future price. While Goldman Sachs is bearish, Morgan Stanley is bullish, and JP Morgan neutral. Altogether, analysts forecast more than a 20% upside for this premium EV stock. And meanwhile, as analysts try to rate NIO, long-term investors may have a huge opportunity to pick up NIO at a heavily discounted price. So why has NIO stock been struggling in recent years? Over the past year, the company has faced a mix of macroeconomic headwinds and industry-specific challenges that has weakened investor sentiment. The most significant factor is the ongoing ruthless price war in China's market, led by Tesla and BYD, which has compelled car makers to cut prices. Now, as a premium brand, NIO's margins have been hit hard. Tesla's aggressive discounts have made it tough for NIO to hold on to its pricing advantage. NIO, therefore, responded by reducing promotional incentives to show up its bottom line, which led to a brief dip in sales volume a few months ago. And China's broader economic struggles also played a role outside the EV market. Softer GDP growth, property market concerns, and weakening consumer confidence have created a challenging environment for large discretionary purchases, which include electric cars. Meanwhile, NIO's continued investments in R&D, production capacity, and battery swapping infrastructure have increased its losses in recent quarters. However, we do know that these initiatives are crucial for NIO's future growth, but have led to heavy quarterly losses, prompting Wall Street to question the company's financial health. And this is a reasonable assessment, as future funding would be costly today, both debt-wise in terms of interest rates and equity-wise in terms of a low stock price. Now, despite these obstacles, NIO's sales numbers have been increasing to a higher level. In Q3, it delivered a record 61,000 vehicles, solidifying its status as the top premium EV brand in China for cars priced over 300,000. Then, NIO followed up with an even better Q4 on deliveries, shipping over 72,000 vehicles, which is a year-on-year increase of over 45%. And early 2025 data does show NIO's sales are not slowing down. January and February deliveries rose 37% and 62% year over year, respectively. And these sales numbers show a continued demand for NIO's EV lineup inside the hyper-competitive Chinese market. And NIO is competing with some of the world's most established EV makers and has underperformed on a peer comparison basis. However, any shrewd investors should always be looking for stocks that are undervalued rather than trading at all-time highs. So the recent sales numbers are encouraging, and 2025 will see NIO add 2 new models to their EV lineup, the ET9 and Firefly, launching during March and April respectively. And the NIO ET9 is a battery-powered full-size sedan, and it's the first NIO vehicle to use the new Shenji autonomous driving chip, making it NIO's flagship vehicle. According to NIO, each of the ET9's 2 Shenji chips has a higher processing ability than the previous top Atom system, which consisted of 4 NVIDIA chips. And the ET9 is powered by a 100 kilowatt battery and can be swapped at a 4th gen NIO swap station in just 144 seconds. The battery boasts a CLTC range of 650 kilometers. And Deutsche Bank analysts expect monthly sales of the NIO ET9 to be 1,500 units, with CEO William Lee saying, "The ET9 won't be a strong performer in terms of total sales numbers, but if it sells 1,000 units a month, we'll be quite happy." And prior to the availability of the ET9, NIO's highest priced model was the ES8, an SUV that delivered over 8,000 units from January to November in 2024. And NIO's other premium sedan, the ET7, delivered 6,406 vehicles in the same period. Along with the ET9, NIO also launched the Firefly brand during NIO Day 2024, designed to challenge the BMW Mini and Mercedes-Benz Smart One, with an eye on the global market. In 2024, pre-sales for Firefly began in China, with NIO calling it a premium boutique small car. And Firefly began pre-sales at a price of just under $150,000 and will be launched in April 2025, 1 month from now. Post-launch, Firefly will cost around $150,000, which includes a 42 kilowatt battery that offers a 42 kilowatt range. Another vehicle that could help NIO grow in 2025 is the new L60. The Onvo L60 went on sale in September 2024 in China, following its debut in May. The design of the Onvo L60 was led by former Bentley designer Paul Perez. And the L60 does look similar to the Tesla Model Y, which is to be expected, with both designs optimized for a low drag coefficient. The L60's drag coefficient of 0.229 is slightly superior to the Model Y's of 0.236. And the cabin of the L60 adopts a sleek and minimalist approach similar to Tesla, with a single 3K infotainment screen mounted horizontally in the front passenger compartment. The L60 is compatible with NIO's 4th gen battery swap stations, as well as the 3rd gen stations with modifications. At launch, approximately 1,000 stations will support the L60, with plans for 2,500 stations by the end of 2025. As a result, buyers can opt for battery as a service, which offers a significantly lower purchase price, but with a monthly rental fee, depending on the battery pack size. As we know, one of the unique things with NIO is its battery swap stations, and this feature of the NIO system could produce steady long-term revenue over time. As of February 2025, NIO currently has over 3,000 battery swap stations in China, with Shanghai having the most at 183. The company also has 58 stations in Europe, including 20 in Norway and 19 in Germany. And NIO management claims the swap station fee is comparable to the cost of supercharging. And what makes NIO battery subscription service so attractive is customer peace of mind. Customers who choose to lease the battery pay a monthly fee similar to the fuel costs of a non-electric vehicle. And in return, they get to use the vehicle worry-free without any concern about battery maintenance or battery replacement. I think this is a great long-term option. So NIO is expected to post its Q4 results in a few days. With robust delivery growth, Q4 will likely mark a key moment for NIO. In Q3, vehicle deliveries were 61,855 in the third quarter of 2024. This consisted of 61,023 vehicles from the company's premium smart electric vehicle brand NIO, and 832 vehicles from the company's family brand Onvo. And this represented an increase of 11.6% from the third quarter in 2023, and an increase of 7.8% from the second quarter of 2024. And looking ahead to Q4, management expects deliveries to be somewhere between 72 and 75,000 for that period, signaling a potential 50% jump from the same quarter a year earlier. Now, growth on that scale tends to catch Wall Street's attention, even if it has been already priced in. However, investors should be prepared for another quarterly loss, currently priced at 0.34. From a valuation perspective, NIO appears to be surprisingly cheap. For context, the stock is trading at just a 0.68 multiplier of its 2025 projected sales. BYD, China's largest EV maker, trades at 1x sales for 2025. Now, one could argue that NIO is still posting losses, which explains this big discount. However, the moment NIO posts a profit at the current valuation, the stock could emerge as a massive bargain, especially with sales projected to continue to grow in the double digits over the next few years. So a mix of sales growth and valuation gains could result in a positive re-rating by the end of 2025. Often, investor sentiment can be found on the stock chart, especially around reporting season. Now, look at NIO's chart for the last few weeks. We did have a short-term break of the downtrend line, peaking at $5.13, before sellers immediately quashed any investor excitement by pushing the stock price back down, with price closing the break week at $4.63. The last week, sellers were at it again, pushing price down to the low of $4.10, only for price to reverse and close back up at $4.47, just under the open. Now, based on this price action and the lows during January and February, there does seem to be short-term support for NIO at the $4 level. But if price falls through $4, it would more than likely be heading to the previous support level of around $3.60, where price stopped falling during August 24. The upside potential for NIO is high, but to confirm NIO is making a sustainable move, we first need to see the price take out $6, and then to take out the recent peak of $7.71. So if the Q4 earnings are positive, this may be the catalyst to start this move to the upside. Analysts on Wall Street remain concerned about NIO's investment profile, with the stock carrying an overall hold rating based on 1 buy, 4 hold and 1 sell rating over the past 3 months. However, NIO's average price target of $5.25 per share indicates almost a 22% upside potential over the next 12 months. NIO's growth story remains compelling despite its share price struggling over the last 12 months. The Chinese EV market is hyper-competitive, and with all firms struggling for ongoing market share. However, when you look at NIO's climbing delivery numbers, 2025 could be a real turning point. China's economy is also poised for stabilization, and the global EV market is heating up, so NIO is well positioned to tap into opportunities, both in the domestic market and abroad. The market may have discounted its shares due to the past and present uncertainties. Still, as clarity emerges, those willing to look beyond its near-term losses, amongst other worries, may find themselves well rewarded. If you've enjoyed my analysis of NIO, subscribe to the channel for more videos. And if you want to learn more about NIO's stock price, including a 2025 price prediction, watch this video next. See you there.